to Insights. I'm Eric. Thanks for joining us this morning. We're going to talk about the grain market again. We did a written review over the weekend. That was a quick one. I want to follow that up with a open content video review because there's obviously growing concern that the grain market is losing upward steam, and for various reasons. They're talking about it on the internet, and everyone's kind of going down the tubes as a result of it. And we need to talk about why specifically. I'm not really concerned about others' explanations. We know here, anybody who's watching the Matrix knows the reason why the grain complex is slowing is the weekly trends are extended and or the weekly cycle. The price cycles here, the time cycles are here. They're above 2. They're bolded red because they're extreme. And what this equates to is we're pushing on a string in terms of time and price. Not so much for corn, but in terms of the price. But all the rest of them, it's a difficult move to go higher, and it's because the weekly are so extended. So anytime that there's a daily decline, a move downward, it always opens up the possibility that the downward move will dip into the weekly trend to reset these cycles, which would be favorable longer term. But to do that, we either need a sharp move down or you need a long grinding sideways action with multiple resets. And that's possibly what we're getting involved with, where eventually the weekly trend will get pulled lower. If you can't move higher, these trends, the computer recognizes compression in time, which then makes the trend vulnerable to a reset, but usually it will be a shorter term one rather than a longer protracted bear market or correction. But right now we're seeing that the corn and soybeans are out of alignment, and so we have consolidation starting. It should spill over to wheat pretty soon. Wheat's been up and it's been triple up, but it's been late. And this number right here, which is the X bar, which is the composite mean cycle, is quite high. It tells us that all the daily, weekly, and monthly together are pretty high, and it's something that you want to stay away from. So really, the grain market is not the best place in the matrix to be looking. I've said this for weeks and probably close to a month now. There are other plays. Grains were the play in the spring as they moved up and they organized into triple up, and many of them were early, and they've been a play for quite a while. But now we have to digest those gains and reset the cycles. This doesn't mean, though, that the invisible hand is out and no longer interested. Now we have to go through the process of shifting control of the trend from the weak hands to the strong. And I know the public and the various people who influence the public think they're the strong hands. And there's too much short-term discussions on the internet to even suggest that people know anything. There's a lot of talk about fundamentals, but it doesn't really line up with what the invisible hand says. And I've found that the invisible hand is right through the longer term way more than everyone who's chasing the short term, and it's far more accurate. So I'm not looking for fundamental explanations, and I am not really looking to join the conversation on the internet. What I'm here to propose is that the conversation of the invisible hand, which is the message in the market, is what we're trying to follow, and we're going to show you how to do that. I'm not going to reveal when these assets are going to realign again and move into a reset position through the evolution of the trade. If you want to learn more about that, you would click the link. I'll leave the link in the video below for anyone who's not a subscriber. I would read up on that, and it will talk about how trends are fractal in nature, and there's 3 of them that move together, and how you move through that through a core position. It's really nothing about short-term trading, even though that's what the internet's all about. And even whether you're a producer or trader or user of these commodities, you really have to incorporate some sort of discipline inside your world in order to make so you don't end up chasing your tail on the short term. And buying in and out is not, it's difficult to do, and it can lead to intense confusion as you go long, go short, go long, go short. I mean, there's no discipline in that. You should be following the primary trend. They're all up. The primary trends are still relatively young, but they're a little bit extended here, and they probably need a breather, and they need a breather because the weekly is so extended. Now, there's other markets, as I've said, that are not. If you're really interested in them, you should be playing in markets like Bitcoin and probably the reset in the U.S. stock market, especially the Nasdaq 100. But those are all reviews that are separate, so I suggest going to watch them. People who have rotated away from here are benefiting from that already. If you're so focused, if you have to be focused on these markets, that's fine. But if you can move around, try and look at some other places that have resets that are much early. They'll say early here. You can ask about them if you're interested, and or I can point you towards the reviews that we have just done that are revealing them. Bitcoin's one of those markets, but then again, people in this market tend not to float over to Bitcoin much. And if they do, they often have the wrong conversation or the wrong reasons why they're doing it. But I've said people are starting to approach the grain markets as if there's a growing level of complacency, there's a disinterested, there's nothing to trade on. And I would caution against that interpretation. There's quite a bit to trade on. There's a lot going on that's not manifesting itself into price right at the moment. And focus your attention here into the energy columns. And we're going to take a look at that in a second, closer detail. But these energy builds, which are either bullish or positive, bullish or above 0 and above 60 for concentrated, and below 0 and below minus 60 is concentrated. They're anything but around the 0 line. 0 is relatively neutral. It suggests complacency or nobody cares. There's boredom. These markets aren't reflecting boredom. Corn's 49, soybean 64, positive DI2s. The energy build for wheat is minus 65, which means there's probably it reflects the hit that we've seen in wheat and probably even more to come as the invisible hand likely wants to get in. But it does that by setting the market up. So these are not around the 0 line whatsoever. So the idea that there's nothing here and it's time to move on and there's really nothing to talk about. That's the invisible hand is positioned for things that people aren't even discussing. Perhaps it's next year, perhaps they're shipping, but perhaps they're foreign relations between nations, currency movements, and we'll find out. I mean, that's how it always works. These energy builds turn concentrated for a reason, and then the news flow comes afterwards. I'll leave the gurus explain why that's going to happen when it does happen, even though they are not revealing it ahead of time. They like to play like they know what's going on and say, hey, well, this is the reason for that, even though it's coincidental and there's no real information. Being a play-by-play broadcaster or announcer is not really forecasting. It shows no understanding of what's the dynamics that are taking place. It doesn't understand what the invisible hand is doing. You're just reporting what they're doing. There's a big difference between the two of those. So let's take a look at these energy builds in close detail, and we're going to see how there's a lot of action taking place behind the scenes. This one's corn. Again, you can see the bullish energy build here in 2000 before it sent the market higher. Nobody wanted to buy corn, and we were talking about nibbling back then. We were the crazy ones that said, hey, there's something going on here. Well, we're pushing these numbers. It's taken a while and slowing down, but we're closer to the point of which there was a bullish energy build that sent prices higher. Now, at this current level, it can go even higher than this. So while this has a bullish bias, it's not statistically concentrated yet, so we'll have to watch. There is no one playing in the corn market. This is awfully low. This often happens, as it did down in here, where interest just walks away and then corn takes off under a strong energy build. We're getting a stronger bullish energy build with each passing week, and then nobody's playing. So this is a great setup for corn. Soybeans is showing a similar thing. There's no one playing there, and the energy builds is even bigger than it was when the market turned back in here. It didn't even get statistically concentrated. The invisible hand really wants in on soybeans. Don't ask me why. Don't ask me what the reason for it. I'm sure other people will probably give you a lot of reasons. Excuse me, a lot of reasons, and some of them will make sense, and others will be off the wall, so to speak, because I wouldn't really know how to even challenge them. But this is a pretty decent sized energy build, 64 and 32. This is quite large. I mean, the difference between the energy builds in the past here is that the primary trend was down. So what happens is you get you get large energy builds and they cause short covering rallies, but it doesn't really sustain a primary trend flip. This one's taking place as the primary trend is up, and this is much different. So we have a limited snapshot of soybeans, but in the past we've seen this before. But when the primary trend flips up, and then you get energy builds like this, these are extremely powerful. So the invisible hand wants in on soybeans. That's all we know. And eventually it's going to cause the composite trend to reset, and then soybeans is going to take off because this is an extremely large energy build. This has got the makings of one. And when you have an energy build like this and the three time frames align, things fly. And these energy builds are pretty reliable. They're about 3/4 of the time. The market moves in a reasonable amount of time with them. Sometimes it ignores them, but then I always find that the invisible hand will come back and make another energy build if it fails, and then that one will turn the market. So this is a pretty reliable indicator. And not enough to trade by itself. We use the primary, secondary, and tertiary trends to time these things, but we always keep an eye on these. If you subscribe to the matrix, these are updated on a weekly basis, and we do talk about them. So you learn to watch this relative to the trends that are in place. So this is a significant setup inside a primary uptrend. Wheat has moved quite a bit. And again, a market that nobody's interested in or the invisible hand doesn't care about, well, we have one heck of a move. We went from a statistically concentrated bill that sent the spike, and we sent it up to all and higher highs. Now we've crashed below as everybody's either jumped on board, and the distribution, it tells us that there's got to be some way to relieve this now, even though DI2 is not way down here like it should be. You got to probably get this off the mat. So maybe that's happening into the current wave of selling. We don't know. We'll see that on Friday. But there's a lot of volatility on wheat. Here's a market that's relatively apathetic and nobody cares. It's floating around the zero line. It's not doing anything. This market is moving up and down like a sawtooth action. There's a lot at play here. The invisible hand recognizes something, disconnects anything. The primary trend is up. So if this gets off here and moves back up again, it's going to be bullish. We have core positions in all these three markets because the primary trends are up. We use energy and the composite trend to either take profits or allocate around that core position. So but the whole point of these energy builds is suggest and defines that the invisible hand is certainly not complacent. There's a lot going on. Now, whether the conversation on the internet says everything's boring, who cares what they say? I mean, again, people will make fun of this because they're like, well, I don't get what this is telling me, and I've never seen this before. Well, you've never seen this before because it's not coming straight from a textbook, and I'm not sharing it. But it's extremely reliable, and you see it now, so keep an eye on it. Anyone who's subscribed to the Matrix knows this stuff is difficult to beat. That's why they keep coming back. Now, if you're not subscribed, well, then you have doubt, and it takes a couple weeks or a few months to overcome that, and that usually happens. But again, I can only show it to you. Eventually, people who are on the fence have to decide to walk through the door. I try to encourage that to bring in a new perspective. But again, the individual must make the decision that they want to learn something else. So in terms of the grain market, the setups are quiet. I mean, they're anything but quiet. Um, the market is likely focusing and moving with these energy builds has nothing to do with crop ratings and yields for 2021. At least that's my guess. I would assume the market moves on. The invisible hand looks ahead 6, 9 months, sometimes even a little bit more. So it's probably well past this year's crop. And that's my assumption. I'm not a farmer, and I'm not sitting anywhere where everyone says, well, this guy's a real expert in the grain market. Well, the only expert that I am is tracking the invisible hand. You'll find out that that's difficult to beat. And eventually it'll earn your respect in time. But again, we have to open these things up so people can watch and see them for themselves. If you choose to subscribe to the Matrix, you can do so down, follow the link, and then, buy up a key that goes until the end of the year. You can talk to me after that, and we can talk specifically. Again, I can talk about this stuff. Can't nail the fundamentals of anything related to farming. I probably know people who can do that quite well and can hook you up with them, but me, not so much. This is the invisible hand, and this is our expertise, and it's quite different than anything you probably have worked and looked at before. It's not really TA. If you notice, there's no charts to speak of that look like heads and shoulder patterns, flags, continuation, moving averages. They're all irrelevant. What it has to do with the movement and the alignment of time and price and energy, and the more the markets are aligned, the more powerful things go. And I know it brings a lot of skepticism, but it usually gets put to bed very quickly as you realize, wow, this stuff really does have a significant. At first, you might think it's luck, and then it keeps going over and over and over again. So the only thing I would mention here is that wheat is highlighted red. Anyone who knows the matrix knows that this is a late cycle. Its primary trend decline 1 for various reasons. I don't think that this makes wheat dangerous. Wheat's probably going to reset, and then it'll probably knock it down. I would still go after wheat if we could get the composite trend to reset. This has just to do with this number right here. It's slightly above zero point 0.5. The wheat's primary trend doesn't last as long as the other markets, but it's still, these things can go to 2 standard deviations in terms of time. So that's quite a bit of time. This is an only early stage warning. If you have any questions about the grain market or anything we talked about, even if you're a subscriber, subscribers have the best questions oftentimes. We keep talking to them regularly. If you're not, anyone can write below the video or come back to the blog and talk to me there. Send me a direct email or use the contact page. This is may look intimidating on the surface, but trust me, it's well worth learning. It's just different. It's not easy because it incorporates very few of the concepts that you see out there, and it's different for a reason because it's effective. So I want to thank you guys for watching this video. If you like it, put a thumbs up. If you don't, well, put a thumbs down too. I don't really care. It's free country. It's if you don't like it, it's probably because you don't understand what's being said. And I would encourage watching more of these, because if performance is what you're interested in, this is what you want to be watching. So thanks for watching and enjoy the trading week.